Good, 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 good. All right, excellent. Well, welcome everybody. Thanks for joining us today. Hope you're well and happy. This is Sam Evans with you. Hope everybody's doing okay. Just had a little bit of a sound problem there. I was thinking, what's going on here? But you're all here now, which is really good. Should be able to see my screen as well. Can I just get a confirmation that you can see my screen as well? I'm sharing it at the moment. Should be on full movement and so on. I'm going to be going straight over to charts and so on, so I'm making some notes on my charts as we go today as well. Very good. Excellent. Well, look, firstly, thanks a lot for having me. I've got about 40 minutes here or so to go with you. Really just not going to go through too many slides. I want to kind of jump into the charts to take a look at things. Go through some of the things that I like to focus on as a trader. Excuse me. And from a swing and an intraday perspective, really talking about, if you like, the advantages and also the disadvantages of swing and intraday trading as well. Before I go any further, let's just get a kind of a roll call. Who in the room? Just give me a Y for yes. If you are a swing trader, you'd regard yourself more as a swing trader in these markets. If you're more of a swing trader, let me hear from you there. Yeah, getting a few of you guys coming through on here. Okay, good. Well, the reason why I wanted to kind of go with this then, when I was thinking about what shall I do on this particular session, was I was teaching a class in Philadelphia a couple of weeks ago, working with some students, and had a few people really struggling with kind of their day trading, and I found that of all the students I've taught, one of the more challenging aspects of trading is definitely intraday trading. I found that it's one of the things that a lot of people kind of have a little bit of difficulty with. And I've always said, well, the great thing about the Forex market is it lends itself well to the set and forget your approach. And I believe that one of the things that we can definitely do is remove ourselves more from trading, the better. The more we remove ourselves from trading and the more we allow the market to kind of do its thing while we're not watching, the better. The problem that a day trader has when they're in front of the charts is they're watching every little bit of it, and there's too many opportunities always there. Now, that's not saying obviously it's not a very profitable way of trading, but let's kind of look at some of the things or the approaches that we would use on both sides of it. So I'm going to jump over to the charts, and what I want is to do a comparison between the approach we'd have as a day trader and the approach we'd have as a swing trader. And if you've not tried one or the other, maybe you'll kind of have the impetus to try the one that you haven't been doing. Maybe you day traders will try a bit of swing. I'll also kind of show you some of the markets that I think lend themselves better to intraday trading, and a little technique that I like to use to find the best swing trading markets. For the purpose of this, I'm going to jump over to the FXCM platform. Just give me can you all see the FXCM platform clearly at the moment, guys? I don't think you've seen me kind of use this before, but I'm going to pretty much stick to these charts for the duration of this session, ladies and gents. Yeah, we'll just stick to these ones on here. Okay, very good. All right, cool. Well, listen, one of the things I say is I like to work off no more than really 3 charts. You see, I've got a combination of a daily chart, a 4-hour chart, and a 1-hour chart here on the pound dollar. What I find is the reason I like to stick to my 3 charts when I'm doing my trading is because I don't really want any distractions. Yeah, any more than that, I find that at OTA we kind of work off of a 3 chart time frame here. Purely because I think if you're getting into any more than that, it can get confusing. Anybody here ever found themselves in the run where you're looking at so many charts that you find it impossible almost to make a decision? You know what I mean? It's like, well, if I look at one chart, that's telling me to get short, but then you might really just be seeing what you want to see, and then you look at other charts to justify you getting short when really, you should have been looking at, hey, you know what, this is a great place for me to maybe be a buyer. I think that at the end of the day, if you study too many charts, you can see what you want to see on the chart, and that's not the purpose. The purpose here is to be able to come to a decision of where we are in the market right now. And I think that the swing trader in Forex, yeah, daily to 15 is a nice amount, Ronaldo. I would say also 15-minute charts are pretty much the smallest time frame I would actually ever go down to for anything really. I mean, I'm talking about as a day trader, you wouldn't get me any lower than that. As a swing trader, I don't like to kind of go any lower than that. I find a 15-minute chart covers me for everything. Yeah. The reason why is it's noise. I mean, let's take a look at this bottom right-hand chart. I see people spending their lives on charts like this. You know, now this is a 1 minute chart. Now, from the point of view of trading, yes, can you make money off of a 1 minute chart? Yes, you can. But the biggest danger you've got focusing off of a small time frames like this is while there are opportunities here, everything looks like a great opportunity because the market's moving so much on this chart, but also it limits our profits too. See, one of the things to understand is when you're trading in a long term, you've got more breathing space. You can build a position as well, which is something I'm going to talk about in a later webinar. It's about how to build positions. So if you're one of those people who's kind of like constantly in, out, and you know, what can chop you to pieces is keep jumping into trades, thinking it's going one way, thinking it's going another way. You're going to get a lot of that, what I call noise on a small time frame. So we're going to kind of stay away from that for now. And we're going to really focus on these bigger charts. Now, obviously losing these bigger charts as a swing trader means that we are going to have to be a lot more patient. But what I want you to do is this. Think about it as an exercise like this. No matter the style of trading, treat a chart like a chart. Now, any of you guys who've been in one of my webinars before, you'll know that I like to focus on levels of supply and levels of demand in my trading. This is what we do at Online Trading Academy. So now, here's the thing, okay? One of the things to remember is a small time frame chart, an intraday trader, is more about capturing the current trend that is in play right now. A swing trader is more about kind of going to get with the new trend. So let's just make some notes on here. And what I'll do is I'll make some notes on the chart here for you, and then you can take some screenshots of this. So I think with intraday trading, this is about joining. I think one of the best ways to do is about joining the trend. Let's make this a little bit bigger so you guys can see it. Let's make it bold and kind of do it on here like this. So this is the new default. So intraday trading is more about joining the trend. Yeah? I would say from a swing trading point of view, swing, this is about being the first in the trend, okay? Being first in and staying with it. I like to try and do that. Obviously, every trend is going to come to an end at some point. But that's kind of, if you were to describe it like that, swing trading is being the first in and staying with it. Let's just make that a little smaller because obviously I'm not got a lot of space on my chart there. Let's just do that. There you go. So the intraday is about joining the trend, I think, trying to being the first in the trend and staying with it. That's the way I would describe it. That's the way I would kind of look at it for you guys, you know. That's the way I would say is probably going to be the best approach for you to take with all of this, okay? So like with this in mind, all right, let's talk about what's going on in the pound dollar right now. As a day trader, what does it really make sense for us to kind of do? As a day trader, if we were looking at this right now, we're looking at these smaller charts. Let's take it down to that 15-minute chart. You know, the only thing that really makes sense to me to do directionally at the moment is what? Directionally, what's the thing that I really want to be making sure I'm doing most? Just literally going with the trend, right? Yeah, sticking with the shorts. That's all it's really telling me the smart thing to do is, right? Go with the trend, nothing else. All right? So, you know, again, the thinking is right. So whatever my technique would be going with this particular trend, well, I'm going to use that. So in this case here, as you know, I would like to maybe be using my supply and demand levels. All right. So if I'm going to be doing this, I'd be trying to short a rally back to a good key area of supply. So for example, if I'm marking a supply zone on here, where the institutions have been selling before or some of the bigger market players have been selling, I got a nice area where we had a drop, a base, and then another drop where we had a good drop away. So if the market retraced back to this area here, 53.15 to 53.25, that would be a great short. As you can see, when you're trading with the trend, there's going to be plenty of these levels that are going to get hit, but the bigger the time frame you go to, the less of these trades you're going to get. Now, what's the problem with this though? The problem with this is while it's good, while the trend is underway, I'm going to have to wait a very long time for this level. So the intraday traders maybe going to have to go down to an even smaller time frame to find more recent levels. So it'd be okay. Well, I got a little level here, right? So I got a nice level here to join the trend, and I can be a lot more aggressive trying to get the pullbacks to these areas. Yeah? I can be a lot more aggressive trying to get the pullback to these areas. But what is the major danger that I've got? What is the question I've got to ask myself on this? If I'm only focused on the trend on these smaller time frames, what else I got to? Selling it too low. Good point there, Boris, right? Good point. So our first thing is what we don't want to be doing on here is we want to make sure that when we're joining these trends have room to run. This is a massive problem that a lot of people have. So this is where it's going to be, obviously, a swing trader is going to have the advantage of trying to buy after a drop in price or sell after a rally in price. Does that make sense? So one of the things to think about when you're day trading on here, and I like to use my supply and demand zones for my entries. That's my particular style of trading that I like to use. Okay. So what I'll find myself as a day trader is there's not always going to be a lot of ideal opportunities, because in a fast moving trend on here, while I've got lots of quality levels that are forming on the way down, what I'm not getting are the pullbacks to these particular levels. So I could take a breakout style entry if I really want to, but I've got to make sure I'm not selling too low, as some of you guys rightly pointed out. So here's what we're going to look for. Here's a nice little technique on this. Is while it's good to you're going to have these opportunities to join the trend quite aggressively and get involved in the market, we have to, as intraday traders, make sure that we're not the last person to join the trend. Because if we're the last person to join the trend, we're going to be in a position where obviously we're going to be completely on the wrong side of the market. So what would I be looking out for? Well, guys, even though you may think a daily chart isn't going to necessarily be useful to you as a day trader, it's still not going to hurt for us to focus on where those major buying and selling activities took place. I want to draw your attention to the daily chart for just a second right now. Here we have a drop-based rally area demand zone. Now, the last time prices came here, we've got to ask ourselves a question of the last time prices here, we rallied from 152.50 up to our previous supply area at 155.50. So we've got like a 200 pip area where we've been trading between at the moment. We had a little bit of minor bouncing going on in this area, but now we've come to this area where this last major rally occurred from. Now, with this in mind, does it make a lot of sense for me to be aggressively selling on my intraday charts right now? If I go back to that 5-minute chart, does it make as much sense for me to be selling on this 5-minute chart to go with this current trend right now if I'm coming into an area here? No, it doesn't, because what we've got is a trend going on the daily chart. So we've got higher highs, higher lows, higher high, higher low, higher high, higher low. So while we've taken out this low, yes, we could be forming a brand new downtrend, couldn't we? We could be forming a new downtrend on here, but we don't know. So let's just think about the two different perspectives that we've got on here. The day trader is focused on joining the trend on the small time frames, which is perfectly fine, but still needs to be very aware of where that trend can end. And the last time prices were at the region of 152.50, we had a decent rally from this particular area, didn't we? Therefore, with this in mind, okay, exactly, 52.50 may support it and move it back up again. Exactly. So what could we do as an intraday trader? Well, we still need to require the patience on here. The intraday trader is going to have to wait for a signal. And what I like to do on here is I would want to wait for a series of higher highs and higher lows to start forming on a smaller time frame. Now, you've got it on a 5-minute chart. I'm going to go back to my 15-minute chart. So if I can start to see some of these levels, these higher highs being taken out on this area, that's going to give me a signal to think that maybe we're now going to be rejoining this current uptrend. I think one of the biggest challenges that we face as traders, I've always found as well, is, what really is the current trend? I mean, you can look at all different charts right now. You could say in this 4-hour chart, we're currently in a downward trend. Yeah, but we're a part of a much longer term uptrend, which is part of an even longer term downward trend here. So you've got a short term downtrend, a medium term uptrend, and then a long term downtrend. Yeah. This is exactly the challenge that we face, right? Because this trend here over this last couple of days is definitely down for the first part of the month, isn't it? This trend here since the end of January and all through February has been up, hasn't it? But then we've been in a much longer term downward trend since the summer. So now, how do we define trend? It's a great question on here, because no matter if you're going to be an intraday trader or a swing trader, the key things to understand on here are, okay, I need a clear signal when I should be a buyer and when I should be a seller. That's the most important aspect of all of this, isn't it? When should I be a buyer? When should I be a seller? That's really what I want to focus on. So let's take a look on here. Let's use one bigger chart to tell us, because the problem I'm not big into defining trends. You're not the first person to ask me, Boris, how do you define a trend? You're probably not going to be the last person either. For me, trend is always something that's already happened. Now, you can look at any chart and see a current trend going on, like we have right now, but there is no way I would want to get in the way of this area here, right? There's no way I'd want to get in way of this level of demand because of what the prices did the last time they were there. So I'm not going to really know. My choice is, do I focus on the current downward trend that we've got on the short term, or do I focus on this intraday trend here? Well, if we can start to recognize levels of supply and demand, does it really matter? Does it really matter? So if we look, while we've got supply higher, and let's just kind of draw our attention mainly to this daily chart for a second, because it's just an easy chart to use out, and I'm going to blow this up. It's just a nice easy chart for us to use right now. I've got supply here where we had to drop from. I've got the demand here. What I've also got is another area here. See this area here? Which wasn't here before. See, there's a supply level here as well. See this little zone here? So now we've got a new level of supply formed right here that wasn't here before. Yeah, see that? So we've got this very strong move away where the selling pressure started. So now this tells me something. This tells me that I'm at a key point on the market where we've had a sell-off in price. We're coming back to a level of demand where we rallied from last time. And who's to say that we won't trade between these supply and demand levels until the market decides to go lower or higher? So what we're going to look for on here is we're going to expect a bounce in the region of 152.55. And if this area does hold, we're going to look to rally back up to around 153.50. Now, is there enough profit target there? Well, there's about 100 pips there. So we're going to expect that we could get a 100 pip rally. And then the question is, okay, what can we do at this supply level? We can look to go short again. And then the thing what we'll do on there is we can make a decision, use the opposing demand level as our profit target. See, what I like to do is use the opposing levels of supply and demand as my profit targets. Yeah? So this way, I'm not focused on joining just one thing, like I only want to focus on shorts or I only want to focus on longs. This way, I'm focusing on where should I be a buyer, and if this level holds, where will I take it up to? Supply. If this level of supply holds, where will I take it back down to? Demand. And I will play the trend between the major levels of supply and demand until those areas are broken. Because the problem you've got, guys, is we never really know when it's going to break, do we? We don't know. You know, how many times have you seen what you think is a trend continuing and it doesn't, and then it reverses again? Well, it typically reverses because it hits a major level of institutional supply or institutional demand. So as Ronaldo's asking me, when the price moves up, people are buying, so there's demand. When it's moving down, supply has already been met, so there's no more demand. Am I right? Absolutely. But we would expect, based on here, that there are a lot of unfilled orders in this demand zone. Why can we say that there are a lot of unfilled orders potentially in this level of demand right here? And there's a lot of unfilled orders in this level of supply. Well, we can make that statement because if the amount of people, if all the orders here, all the people who wanted to buy in this particular area, if all the people who wanted to buy in this area got their orders filled, price would not have moved away from this area, would it? If there are enough sellers to meet the willing buyers in this demand zone, what would happen to the price, guys? What would happen to the price? Anybody tell me? What would happen to the price if there were enough sellers to meet the buyers? It would have stayed there. You got it. Prices would have stayed there. They would not have moved. Exactly. Exactly. Prices would not have moved from this area. So the fact that just think about it, if there are 100 people willing to buy at a price, 100 people willing to sell at the same price isn't going to change, is it? Because all those people are going to do their transactions at that point. Likewise, how do I know that there were more willing sell orders than there were buy orders in the area of supply? Because prices fell from this area, right? There had to be more willing sellers than buyers here, because if there were enough buyers to meet the sellers, what would have happened to the price? It would have stayed where it was. So now what I'm going to do is I'm just going to take a bet that if the price comes back to this area again, maybe some of those orders are going to be, maybe some of those area orders are still going to be there. How do I recognize mid-supply? I don't know what mid-supply is. I don't know what you mean by mid-supply, I'm afraid. I don't know what you mean as the mid-supply. Lower, you can't have supply levels lower. You can only have supply levels above price. You can only have supply. Anything below is an area of demand. Any low is a demand area by its nature. Any low, it doesn't even a daily low is an area of demand. A demand area is created when there are more willing buyers and sellers. That's what creates a low. A high is created by there being more willing sellers than buyers. That's just a natural high. Okay. Yeah, I don't know what you mean by middle supply lines. I'm not really sure. I don't quite understand that. The way I've got my levels drawn on here, 154, well, this is a supply zone. The price paused here and dropped heavily away from this area because of the strong drop in price, if that's the answer to the question. I think that's what you mean now. Yeah, it's because of the strong drop in price. That tells me that there's the imbalance. Because if a lot of people are willing to sell and people aren't willing to buy, therefore that's going to create that drop. Good stuff. I just wanted to make sure that I understood your question in the correct way. Very good. Very good. So let's kind of, ramp this up a little bit on here. And let's kind of think about this for a second on here. Does it matter too much? And if this demand level holds, what's going to happen to the price? Price is going to rally again. So therefore, we would be in what form of trend? Well, we potentially, within the day, we'd be in a upward trend again, wouldn't we? We'd be in an upward trend again, right? If the demand level holds. So therefore, okay, yeah, this is a swing. This is like looking at a swing point, okay? These swing points, these supply and demand levels, this is what we'd be looking at as a swing trader. Yeah, because we'd be saying, listen, would you be happy to take an opportunity here and take a profit at the opposing level? There's a good 100 pips there, right? That's what we're going to look at as swing traders. We're going to look at where are the key levels of supply, where are the key levels of demand, buy at supply with targets at buy at demand with targets at supply, sell at supply with targets at demand. So now if we can see this on a daily chart, do we see this phenomenon, this supply and demand occurring on the smaller charts? Yeah, well, yes, we do as well. Yes, we do. We've just hit back on the 15-minute chart into a little supply zone right now, haven't we? It's not the greatest supply zone in the world, but what is our profit potential looking like? Because while we could take a very aggressive short as an intraday trader on here, we could take this short at this little supply zone with a stop just above here and risk about 6 pips on it. But realistically, if we were shorting at 52.73 right now, we're expecting that this market's going to start rallying around 52.58 because of the demand area. So is there really a profit potential there for us right now? It's not. It's not really there. And this is a major trap that a lot of people fall into because they're going to sell and they're going to sell far too late in the trend. Or they buy, but they buy far too late in the upward trend as well. Yeah? You can change the chart to a 15-minute chart, keeping the lines as well. You can do that. You can change this just like this, and you can keep all the lines on here. So if I look now at the profit potential to this area here, yeah, there's some there. We've got this 52. We could get into this. We could take a target down at 52.54 as long as there was a 3-to-1 available. But what I've got to start thinking to myself is, hey, when I get to that next level of demand on that daily chart, When I get to that next daily chart, I don't want to be a buyer, a seller anymore of that area, because look all this buying pressure that came in this particular area. Yeah. So at the end of the day, our question that we've got ourselves is, and what we want to do now, we want to say to ourselves, okay, maybe for now, our downtrend is done as day traders. We could take a little short off of this area if we wanted to, but the profit potential is not really there. And it means we've got a lot of work that we've got to do just to capture a few pips. How much easier would it there be instead to say to ourselves, okay, I'll enter into my demand zone and I'll use my opposing supply zone as a profit target. Just place that trade with a stop just below my demand area and a profit target in my supply zone and be done with it. You know, because then I haven't got to actively be drawing into this. Because as an intraday trader, I've got to keep drawing my zones, keep drawing my zones, keep drawing my zones. It becomes very much like a full-time job, which again, I know some people love trading and there's nothing wrong with that. Yeah. So, Sam, can you explain this? Because every time I watch a Sam Webber side Webber, he says you always need fresh levels. Now you say that's not a correct trade between the levels. The others, who is correct? There's nothing right or wrong about fresh levels. He likes to use fresh levels. It doesn't mean that fresh levels are the only levels that work. Okay, you're going to have a higher probability when the price comes back to a level it hasn't been there. This demand zone is a fresh level, John. The price has not been back here since it last was here. Do you see that? The drop, the base, and the rally. This will be the first time back. This supply zone would be the first time back. Yeah? So this is a fresh level. Both of these levels are what Sam would call a fresh level, because since the drop happened, price has not been back there. You see that? Since this rally occurred, has the price been back there yet? Has the price been back there? Since this rally occurred, the price has not returned there, right? Therefore, it's good. Okay, so it's a fresh area. It's a first time back. We want to try and catch it the first time back, because there's more likely there's some of those orders are left again. So we're still using fresh levels on here, okay? Still using fresh areas, right? See this upper supply area? This is not a fresh area. Why is this not a fresh area? Because since it first formed, the price has been back there again, okay? Everything can be subjective, okay? One could argue that, yeah, this is every strategy is subjective to a degree, because you're taking what you find works for you in most of the times in the market, right? I found that using my levels of supply and demand works for me enough times to warrant it, okay? To keep doing it over and over again, right? So therefore, I'm happy with that. But I've got to then be objective in the way that I find my levels. So, in our classes, we teach all the odds enhancers how to score these out using the correct form of multiple time frame analysis to make it as objective as it can possibly be. Does that make sense? Yeah? All right. They are like guideposts, absolutely. I mean, look, as you can see, here we are. Since we've put that little level in right now, it's hit into our little supply zone. It's had a little move down. It looks like a ton's happening on here. I mean, it's only moved down, 5 pips or so. But remember, as we get down to our lower area at, what was the price? What's the price where it comes in? Let's call it 55. Let's put a line in at 55. I mean, at a push, our profit target would be at 55. So 1, 2, 3. With the size of our zone, we're really pushing our luck, getting a decent risk to reward out of there. But they still become like guideposts. Absolutely. Absolutely. And for somebody who, is into that style of trading, they found their drop-based drop supply area, which we drew in. Price has hit off this area. It's had a fall. But my profit potential is very, very limited because I'm coming into a larger time frame daily area. So do you see the difference here? The intraday trader at the moment is looking to join the shorts, whereas the swing trader, going back over to this chart, is looking to do what? The swing trader is looking for the longs. Yeah? Yeah, I mean, you can use, like I say, you're going to have good odds with your fresh levels, okay? Your odds get decreased along the line, It's also it's very much intricate traders what they like to do. Like a lot of my students who I've taught they find these fresh zones a lot easier than they find the the zones that have been used many, many times. And you're going to see examples of both, Glenn. You're going to see examples of, fresh levels that work. You're going to see examples of not fresh levels that work as well. The key is having it in a system that allows you to make a decision and keep it nice and objective. Now, for me, I'm more about, big picture levels on here. So you won't really find me drawing in these tight little levels and taking tiny little scalp trades off of here, but it's the same principle. The rule is, though, the big picture is going to help us massively. Because again, think about it like this. This is kind of like a little sports car, like a motorbike weaving in and out. And this is like a big articulated semi-lorry. And I don't want to get in front of the semi-lorry because I've got a big picture demand level here. So one of the guides I always teach people is, as intraday traders, if you're aware of where the big picture supply and demand areas, if you understand where the big picture supply and demand areas are, we can use this as a guide for our intraday to know when we can stop going with the trend and when we can. So, if this demand level gets triggered on the daily chart and starts to rally, I'm cool to buy demand zones on my 15-minute chart, even my 5-minute chart, but only up until we get to this supply level at 53.50. Does that make sense, guys? So it's the same principle on here, okay? But because obviously the problem with smaller time frame charts is there's always bigger ones that are going to get in our way. How do I handle economic data releases and news? I don't worry about them. I just focus on where the prices are, where the levels are themselves. I've found, and I worked with Sidon for a very long time, and he worked with me, and I just found over the years that more often than not, the big picture news or the news that happens just tends to force the price to go to where it was going to go anyway. I mean, I think, you can look at volatility. I don't think it matters how hard or how fast the market's going to move. If it hits a quality level of supply or a quality level of demand, it's going to stop, right? And it's the orders themselves that cause these imbalances. It's not the news. Yeah, people may have their own reasons for buying and selling. Sure, they have their own reasons for buying and selling. But it's the news itself, it's the news itself that maybe makes people buy and sell, but where they place their orders, where their orders are on that chart, in those areas where they buy and sell, that's what actually creates the market to go up and down. Therefore, I just look at it like, well, hey, all news does is makes the market go where it was going to go anyway, but it just makes it happen a whole lot quicker. Does that make sense? It's almost like the market goes on steroids for a period of time. So the challenge that we're going to have, like I say, is as intraday traders, you're going to have more trades. You're going to sit there. If you're going to be patient and wait for your right opportunities, you want to sit on your hands and wait. But you've got to make sure as an intraday trader that you've got room to run. I mean, you can see this demand level on the 4-hour chart as well. 4-hour time frame is a really nice area as well, or time frame, should I say, where we can really set and forget. And I like the set and forget style of trading as well. Like, see, we've had to wait for a level to form to be able to take it intraday on this 15-minute chart. But I know for a fact that if price comes back to this area at 152.35 to 152.05, I can just set up my order to buy, put that order in, and let the market do its thing. Yeah, unless it's news from the SMB, right? Absolutely. Let me give you a clue on here, by the way. Not a clue, let me think. I haven't traded the Swiss franc ever since the Swiss National Bank. Did the pegging. If you ask any of my students, 2-3 years, it was about over 2 years ago now, when the Swiss National Bank came out and said, "Oh, we're pegging the Swissy to the euro at 1.2. I just avoided all Swiss pairs. I still don't trade Swiss pairs. I've been telling all my students in OTA, don't trade Swiss pairs. Because there's an artificial level of manipulation there. My greatest fear was, well, if they decide to undo that pegging, what's going to happen? So I just didn't trade it. Because you know what? The laws of, all of these things, all rules are going to help you, okay? Rules are designed to help you stay safe. But when the Swiss National Bank, when a national bank comes in and goes, oh, we're artificially holding our prices down, I just stayed away from it. So I don't trade any pairs. Pound Swiss, dollar Swiss, euro Swiss, the none. And, I'm glad for that as well. Because, there can always be freak, there can always be freak announcements like that can really, really hammer us, right? Always can. And that's why I think we have to be obviously very careful about the things we trade. It's like you're not going to get me trading frozen orange juice futures. I'm a futures trader. Yeah. So there we go. Yeah, I just am staying away from it. I'm just staying away from it completely. Okay. It's just anything like that when when you're getting kind of like big institutions getting involved at that level, we don't want to do it. We just don't want to get involved. So let's kind of go. Let me just say, or is or was floor a good level? Floor? What do you mean floor? A good level? I'm not sure you mean by floor. Oh, the floor, the 112. Well, it was because it was put out there, but again, the market wasn't really moving very much from it. The minute it was done, did you see the tight range it was in? It was in a tight range like for months. It just made it pretty much untradeable. And well, there were people. I know you're joking about it, but there were people I know who were trying to trade that thing, going, well, it's not going to change from here. So they were literally trying to go in there with a big size, trying to take a few pips off of it because it's not going to change from that area. Well, look what happened. I always say if something is that easy, then it's probably going to at some point stop being easy, right? Again, if it seems that obvious, maybe we shouldn't really be doing it. So again, I would make sure you stay away from that. Anything that seems too good to be true typically is. That's like every trading strategy, you're going to incur losses, right? Every strategy is going to incur losses at some point. It's how you handle those losses and how you handle those wins that's important. So are we all clear kind of on this? If we're going to do our intraday trading, that's fine. We're really trying to focus on going with the current trend and being patient to sell rallies in a downtrend or buy pullbacks to demand an uptrend. But we must make sure that we've got room to go when we're going to do that. Yeah. So we do want to make sure that we've got room to go. So on this here, you've got a chance of hitting your little target here. But man, what a lot of hard work for just about a 3-to-1 trade on that. Okay. So again, however, the swing trader is going to be thinking, right, when price does come into my demand area, I'm now looking for a long because I'm expecting prices to rally back up to that supply area again. Does that make sense, guys? So who's got more time to think? Well, obviously the swing trader's got more time to think. You're just going to have a lot more patience. So let's go to some other charts and take a look. I mean, I've been quite, one of my favorite markets to trade is the Canadian dollar against Japanese yen. Love this market. You can still buy 52.50. Yeah, I'd probably go a little lower, just for the risk to reward ratio on here. I'd probably be trying to get in. You see off this, I like it off of here. So I'd probably go in a little bit tighter, maybe around 52.30, because I'd like a slightly better risk to reward ratio. Because on a trade like this, I wouldn't want to take a zone as big as 52.50 to 51.90. So I'd probably try and get a little deeper in the zone. Maybe try and get about 52.30s. Yeah, about 52.30s, I would say, with a profit target one at around 53. And then I'd say target number two at about 53.50. So I'd be looking at that. I'd like to buy a touch lower though, because if I buy a touch lower, it just means I've got more chance of getting a better risk to reward ratio. Make sense? Okay, now if that level, yeah, well, you can scale in after the trade as well. You can scale in after the trade. So what I like to do is, that's a great question, by the way, Steve. So what you could do on here is, and this is what I love to do, is if I hit a daily area, you go in with a smaller size off the area here. And if the area starts to hold up, then we can build a position. So what I would do is on my next webinar I'll do a minute, I'll talk about that, because you could dip your toe into the water, try a little bit and then scale in after as it starts to maybe use a smaller time frame. So that'd be a great subject to cover in another session, because I'm all for that. I like to trade all in, all out, or all in and then build as the trade goes on. I'm not a scale out kind of guy because it compromises our risk to reward ratio too much by doing that. Yeah. Yeah, I would still have the stop loss past that distal line. Still absolutely have my stop loss past that distal line just there. Yeah, I'd probably just go around the 51.90s, 51.89s. That's why I'd like to just get in just a little bit lower off of here. Yeah. So on the CAD yen, I'm going to see, we could look at this from intraday and from swing as well. See now, on this market, another way to look at this is where the big picture stuff can kind of come in as well. A couple of key areas that I'm focused on right now is we're just trying to get above some resistance at the moment. I'll just draw in some of my key levels I'd be focused on at the moment on here. It's a nice area of supply right there. I'm not completely enamored by the level of demand to the left there. It's a little bit scrappy. But you see how we're trying to test these highs? Now, this market, looking at it, for me, this is not a trending market. This is kind of just pretty choppy at the moment. I'd avoid this kind of these conditions. When you see these huge spikes in prices like this, really not ideal. But what I'd be looking for on here is if we broke these highs, let's put a number in on this. I'd want to see us trading comfortably above 90, call it 96.40. If we were trading above 96.40, we have plenty of room then, plenty of room to get to our next supply area. You see that? We have room from 96.40 up to around 98.03. So you got, about 250 pips on there. Yeah. Got about 250 pips of, 150 pips, excuse me, of movement on there. So 96.40 up to around the 98. You got 150 pips of movement that we could take on there. So therefore, this is what I'd be looking for right now. I would say as a day trader, not the greatest time of the day to be trading, but if we could take out these current highs, I would be expecting, let's go back to my daily chart, prices to continue to 98.06. So this big picture chart's guiding me. So what I'm going to do is I'd come tomorrow. If we can break above this 96.40s area, I'm going to be looking for levels of demand that are forming and buy pullbacks to fresh areas of demand. But I'm only going to do that when we start trading above 96.40. See how we haven't really closed above it comfortably yet because I don't want to buy a breakout. Does that make sense, guys? Yeah? Because if we fail to trade above 96.40, what are we going to do? We're probably going to fall back to this demand area around 95 again. So then I'm going to have to focus more on intraday shorts back to that area. So at the moment, swing trade-wise, there's not a lot. I'd love to short up at 98.04 to 99.05. I like this area here for swing trade. That'd be great with my opposing supply level as a target. But if I'm prepared to short at that particular point, I'm going to need a signal. It's got to get above these daily areas first, and then if it gets above those daily areas, when it starts to form new levels of demand, then I'll get involved in it. But unless it takes out 96.40 cleanly, I'm going to just focus on this market probably dropping back for a test at 95. Yeah, exactly, Glenn. So I'd say pullbacks on a 15-minute chart, or if you're a little bit more aggressive, maybe a 5-minute chart. So the thing is, if you go to a smaller time frame you go to, the smaller the time frame you go to, the more levels you're going to get, which gives you more of a chance of getting involved in the trend. But the problem is, the more levels you get, but the less reliable they may be. So you have to make the call. Am I going to be a bit more patient and go for more reliable levels, or am I going to take a few more stop outs going for 5-minute levels, but have more chance of joining the trend? That's about your comfort levels. That's about obviously what makes you feel comfortable as a trader. Does that make sense? Yeah. So I'd experiment with both and see how you get on. Personally, I like the 15-minute charts. I find them are low enough that I need to go, nothing less than that. Okay. So again, what we're saying is, while the swing trade at my higher supply level, if we break higher, I'll try and get intraday long up to the area where I want to get short. Okay, otherwise, if this area holds that we're at the moment, I'm going to focus on shorts back down to the 95 area. So guys, the real key to intraday and swing trading really is it's not much different. The thing that we have to understand, or the best thing that we have to do really, is know where we are in combination with the small charts and the big charts. And then when we know where we are between the big charts and the small charts, then we can obviously get an idea of when it makes sense to be an intraday trader and when it makes sense to be a swing trader. So I hope that gives you a little bit of an idea, a little bit of a kind of a clue into kind of the mindset that we're looking at again. Just try experimenting with no more than 3 charts. Let me know how you get on and so on. And if you've got any questions for me, these are my details here. The best place to actually get me is you can follow me on Twitter at SamEvansTrader, or you can capture me here, emails sevans@tradingacademy.com. Yeah, there's my email on there. But if you follow me on Twitter, and if you message me on the Twitter, I do respond to the messages that come through as well. Okay. I will go up as long as I'll keep going with that until it hits the supply levels. That's what I'll do, Ray. I'll keep going with it until it hits those supply levels on the daily charts. They're my guide. They're my guide. The supply areas and the big on the areas of on the daily charts. There's the Twitter handle in there as well. No worries. Okay. Maybe not on that one, Glenn, but do enjoy it. Say hi to Rob Jacobs there. Rob Jacobs and Blake, I both know them there actually. So tell them you're in one of my web. Rob Jacobs and sorry, Dave Jacobs and Blake. Dave and Blake. They'll be the guys looking after you. Just say you're in one of my webinars. I'll get them to take care of you. Okay, buddy. All right, good stuff, guys. Thanks a lot. Thanks God for you guys who voted for us as well voted me in the Forex Best Awards as well. Really meant a lot as well. So thanks, FXStreet. I'll see you guys real soon, and we'll do next webinar on building positions as well. Hope that helps. Thanks a lot, everybody. Take care of yourselves. Bye bye.